A big winner on the Dow today was Disney, while Dow DuPont trailed. A Biomed leading the S&P 500. Michael Kors lagging. Few stock-specific stories we'll get to in the hour, Mike. But generally, trade set us off on a negative tone. Didn't help to get that political noise in the middle of the day.
No, really just a couple of excuses to back off of the all-time highs. When the stock futures opened up last night, they were looking for about a down 150 open for the Dow. We more or less got there. And I do think that harder line on trade, the reminder that nothing really remains settled, was the excuse. But again, it's this market was something.
Nothing remains settled. I mean, the word was that the Chinese were going to walk away on this posture.
No, it's basically moving further apart, right?
Do you see that as a negative?
It's certainly a net negative. I just don't think it's the only thing that matters for the markets. So today, once again, some groups kind of step up and limit the damage. And today, energy and tech, which was weak last week. So that's why it seems like the market as a whole never seems to undergo any kind of wholesale pressure.
Is this another example of a session where we've been led by Asia and Europe and we couldn't shake it off?
It looks like that. I mean, last week that was the story where there was a tailwind from the rebounds overseas. We didn't have that help today. Obviously, pretty big sell-offs in those markets. I think it's a bigger issue if, in fact, it proved that those were just kind of bounces last week and not a change in trend or not stabilization. We'll have to see if that's the way it turns.
I mean, Nancy, we go to the trade-sensitive group, industrials, for instance. It was down today, but nothing severe in terms of some of the headlines, which make it look like the U.S. and China are nowhere coming close to any sort of deal. Do you make any changes on these headlines?
You know, we're just looking at individual stock opportunities. So I will say, you know, China and Japan were closed today, so we didn't have any reaction there. So I think we'll see tomorrow how serious the market takes this. But, you know, we're overweight industrials. We still like a number of the names in the group. There was a negative mention in Barron's over the weekend on defense that it has run more than tech. And so maybe you saw a little bit of lightening up there, but we're just looking for opportunities to buy more in the U.S. space because that's where we see the value and the growth.
Mike, just quickly want to come back to this outperformance in oil and energy names today. I mean, last week materials is also the best performing sector.
Yeah.
Is this now, whether we're talking about the commodities underlying it or the sectors, the area with momentum behind it?
It's unclear how much momentum. Obviously, a weak dollar helps. Obviously, today the OPEC headline helps a little bit with oil. So I don't know that it's a wholesale kind of reflation trade back on and we're going to be up and away with that. But it certainly shows you that they were beaten up enough and neglected enough that we can rally. I don't think it was.
Feels like there was a risk going in that OPEC would make a change.
That's right.
To respond to President Trump criticizing the cartel and the high oil prices. They didn't.
That's right.
And Brent went to 80.
Brent went to 80. WTI is about $1 or so below a 4-year high. So, yeah, we're still back up to the very upper end of the range. So, once again, I don't know that tells you anything about the economy or about what parts of the market, aside from energy, are going to work best. But it does show that it doesn't seem like the market ever kind of goes all in one direction, all of its pieces up or down.